All right, good morning, welcome back to this channel. Today is 22nd February 2025. I'm coming up today to just make some reviews on my previous analysis, not just to analyze the market. I have to sometimes to come back and review what price action I've done in the past, and I have just 4 pairs to review today, which are the EURJPY, GBPJPY, USDJPY, gold, and GBPCAD. I've been trading these pairs for the past 2 weeks now, and I've been following my analysis, and they have been on my watch list. As you can know, I'm a swing trader, and some of my analysis went well, and a little bit of them were not actually well, though they started doing well. But you know how forex is all about. So today is very much to show and to share my screen on why I had the bias I had on these pairs. Just like throughout for the past 1 week and some days, I've been bullish on gold, I've been bullish on EURUSD, I've been bullish on GBPUSD because they are correlated pairs. Likewise, I've been bearish on USDJPY, EURJPY, and GBPJPY, because these pairs have shown signs of bearish momentum from the higher time frame. Analyze from the higher time frame down to the weekly, to the daily, and the 4-hour time frame where I pick my entries, and sometimes the 1 hour. Use 1 hour as a confirmation. So this is much of knowing your bias and what is the market doing at the particular given time. Is it together with the fundamental bias of fundamental drivers of the market, like the economic events, the bank interest rates, the tariff and threats from US and Russia and Ukraine? I put all these things together and use gatekeeping, and use price action and technicals as my gatekeeping, and it has been working well for the past for over the years I've been trading this industry. I've been in this forex industry. Is working because I don't just base on technicals alone, and I don't just base on fundamentals alone. I use the both of them to give myself a bias and know that, okay, if I'm going to this direction, this is where the banks are going, this is where the institutions are going, this is where the country economy, this is what it forecasts at the moment. So I dive to my screen and make sure you follow us and subscribe and comment, because that's how you can very much encourage the channel to keep growing. And as we all grow, we'll learn more and more of it, and always stick to it, and make sure you invite friends on this channel. So see you on my screen. Bye. Okay, welcome here. This is my screen. First, I'm starting with EURJPY. And last week, if you followed my analysis, my previous analysis last week, where I said EURJPY, I'm very much bearish on all JPY pairs, be it EURJPY, be it USDJPY, be it GBPJPY. Why? Because from the weekly time frame, go back there, I saw price trading above this level, and I made this line a kind of support when price was 3 up here, and I said if price should break here, automatically it's coming to 30 trend line, because if you check from the higher time frame, which is the weekly, we have higher high, higher low, higher high, higher low, higher high, and it's coming to test. This is a support, a very strong support from the weekly time frame, and once price gets here, it could do one or two things. It either breaks below it and come to the very big support, which is this, or it could just bounce off it and trade back up. So when I saw this on Saturday, I saw it on Friday, and I made the video on Saturday, and I said come Monday or Tuesday I will be bearish on EURJPY. I didn't see my entry on Monday, I saw it on Tuesday. On Tuesday and Wednesday, then I saw it. How did I enter this pair? This is the daily time frame. I went to the 4-hour chart. It's very simple. I went to the 4-hour chart, and I followed this my support when price was very much up here, and I drew a line like this. If you watch my previous videos, I made something like this, and I said if I should see a 1-hour candle close below this line, I'll be bearish on EURJPY. And lo and behold, I saw a 1-hour candle close and also a 4-hour candle close. To make sure my confirmation is very strong, I had to go to, I saw this was the 4-hour, this was the hour candle close, up to 3 of them here. I went bearish here. I went to my 4-hour chart to move my stop loss. When I went bearish at the close of this candle, and I moved my stop loss above here. This was where my stop loss was resting, and guess what? Price actually dropped because I had it. This was I entered this trade on Wednesday, and price bled to the downside. On Thursday, I moved. This line here was where I took out 70% of my position because my overall target was just at this support. So when price got here on Thursday, I closed out Thursday morning. Yeah, I closed out. I moved my stop loss to break even from here. I moved my stop loss to where this green line is, and guess what? Once price got here, it bounced off, took me out, tested my entry again to pick some sell orders, and dropped to this massive support from the weekly time frame. So this tells you why taking partials is very important in trading. Had it been let's say I'm a delusional trader and I didn't take partials, remember I was almost at my TP and I took at least 70% of my position. I made profit. Price it took me off, but I made profit nonetheless. See, I entered here and it bled I held it for a day, and price got here. I took something out for myself and it took me out. However, it reached my entry and it still dropped massively to this my overall TP. This tells you that even if I didn't, let's say I didn't take partials here, if I have left the trade and say, okay, since I know that price is still coming to do what it's meant to do, I would have still eaten something. But however, I don't trade like that. Whenever I see at 100% retracement, I take away something. Now if we should bring out Fibonacci from swing high to swing low, as you can see, look at where price started dropping at the 50 as a 0.50 fib level. However, it's touched the 0.60. maybe there was some sell orders resting above here. There were some sell orders and price tested it, took those orders and bled to the downside. That's what multiple time frame analysis tells you. It helps you to know the overall bias of the market, right? When you know the overall bias, you don't shake. You place your entry and you go and do what you want to do. Is poster, you can go and play your football, play your video games, and do other business you have to do. This is why if you check the number of traders that are actually profitable, it's just a few of them that are day traders. I know day traders will come and argue that yeah, they make money, but it's definitely not you. The most important thing is when you know the general trend of the market, where the market is going at that particular given time, you know it, place your entry, know your risk, identify your risk and leave it and go do what you want to do. You don't need to be in front of your system, in front of your phone, monitoring trades. No. Those things lead to losses, because once you're monitoring your screen, you're there 247. Before you know, you start clicking buttons. Before you know it, you start seeing trades that are actually not there. That's why it's best to use the multiple time frame analysis approach. So this is it. This is my review on EURJPY. However, I want to see, I'm no more on this trade. I want to see if I see a 4-hour candle close below this support, then I will start selling to this support. But however, for now, I might be having a bullish bias on this pair, because if you see, there is something here. This was a very nice point of interest, and this support level, what price does whenever it comes to a support level, it tends to make a retracement to the upside. It could come to this resistance, that this support have come to resistance now. So however, on Monday I won't be trading it. On Monday I want to see what price does. If it trades below here, break this support and closes below with a daily candle, then we can know that it's coming to this massive support on the monthly time frame. But if it doesn't, if it trades and closes above this my level, this price, then it is coming to test this price next. So but until then, let's keep our fingers crossed and see what it does. Let's go to USDJPY. USDJPY, I took out partials too and it took me out, but I still made something out of it. Likewise GBPJPY, right? Okay, this is USDJPY. Let me start from the weekly. As you can see, this is where I entered this pair, and USDJPY made a massive pump to the downside. It made a massive drop, and this here, this is a support level. a minor support, however, from the weekly time frame, and this is where price has come to rest. It might break it, touch this trend line and bleed to this downside, or it might bounce off and move to the upside. But this is the weekly time frame. When I saw price trading above this resistance, I knew that something was about to happen, so I had to normally go to my daily time frame. Okay, what is this? So from my daily charts, what did I see? I saw price. When I saw this move, I knew that something was wrong. This was a trap for people to enter. However, I left it on, that was Wednesday, 12th February. I saw this. I knew that price would test here, get here, because there are people that actually started buying above, because once you see price trading above this resistance, they'll be like, okay, maybe they saw a 4-hour candle close above here, they'll be like, okay, it's time to buy. And once they started buying, look at what happened. This massive red candle. Whenever I see price trading above a resistance, I don't start buying immediately. I have to see like 2 daily candle close above that resistance to be sure that, okay, this trend has actually reversed. I don't use the 4-hour candle. When I want to confirm a reversal trade, I use a daily candle, 2 to be precise, 2 daily candle close, because I'm a kind of trader. I like to leave my trade and do what I want to do. So I want to make sure that when I'm in that position, I'm not shaking, I'm not fidgeting, I'm not saying, oh, what's price doing? I'm not in front of my system. That's why I make sure before I enter any trade, I'm very 100% sure. If it goes on the way I planned, fine, I eat. But if it doesn't, I still take my loss. But however, most of the time, I don't always get stopped out, because I make sure I'm patient enough to see what price is doing. Because one thing about this industry is you have to have patience to make it. To be profitable in the forex market, you need patience. You don't need to be everywhere at the same time. You have to actually know what you're doing. You have to know your onions. You have to be sure that, okay, if I'm trading this position, if I'm on this position, I know where I'm going to get, I know where I'm getting out first before I get in. Now let's go to the 4-hour time frame. On the 4-hour, like I said, this was the trap. Some people started seeing this on Wednesday and they were like, oh, it's buying, and they started buying. And however, look at what happened. What I did was, immediately I saw this, I said, okay, I will start trading this pair once I see a 4-hour candle close and 2 1-hour candle close below this resistance. And this is what happened. I saw 4-hour candle close inside it, I didn't touch it, and I saw a full 4-hour candle close below it. This was a full bearish confirmation for me to start going bearish on this pair. And again, my 1-hour candle, my 1-hour time frame actually confirmed it. As you can see, this was where I entered on Thursday. It's very much simple if you understand price action. I entered here, and guess what? This was my risk to reward, 2 to 28. I entered here, held this trade. I entered this trade before I entered EURJPY. I entered this trade first on Thursday, held it till Monday, and once I think I took some percentage of my profit around here, around this price. Yes, 151 here. This was where I took some percentage of, closed my trades here, and when it retraced back, it took me out. However, I have taken out something. I was on profit and I was taking out, and price did what? Rallied up, took some sell orders, and again down to this support. So what does it tell you? That this is a strong support. And however, just like EURJPY, the same JPY pair, to tell you that this support is a very strong support is, if I see price now that it has tested it, for me to go bearish or bullish, to go bearish, I want to see a daily candle close below this support, which will signal a bearish confirmation to the downside. I will take something when it gets to this trend line. Remember, this trend line is from the weekly time frame, and when it closes below this trend line, my overall target will be here. But until it gets here, which I'm not really sure it will, but until then it will take some time, a long time. But until then, Monday, I want to see what price action does, whether it closes, it tests this support and closes above here. When I see it close, I'll know that okay, the market is bullish and is coming back to this resistance, maybe to attack this resistance or to pick some sell orders again to the downside. This is what I want, this is what I'm expecting. First scenario is this, then this, then this. This is the first scenario. Anything could happen. On the other flip side, this could also happen. Price has come here on this support, test it, trade up, test it, make a new high, and when I see a 4-hour candle close here, which means it has taken out this this is lower high, lower low, lower high, lower low, lower high, low, which means that if when it makes a higher high, it has actually countered this bearish movement, which will signify okay, buyers are now in the market and the overall target will be this resistance. However, I'm not going to touch it till Monday. I will see what price does on Monday, likewise Tuesday. So before we go back to where again am I going to touch? Yes, gold, my best pair. Let's start from the weekly. As always, from the weekly, anybody looking at gold will know that gold is very much bullish. Going bearish on gold, else your scalper, your day trader, maybe you're following the retracements and pullbacks. I don't trade like that. I follow where the trend is going, which is the moment I saw gold, I started buying gold from here. When I saw it break above this resistance, I knew that gold is very, very much bullish and it's coming to this price, $3,000 per ounce. That's where gold is coming to. It's just doubling or to get to this price. So last, on my previous analysis, I said I forgot to take some partials. However, I left it. I said something like once I see price trading below here, I will start selling to when it gets to this support. Remember, this is a resistance, but it's now a support. And however, price didn't actually go there. This was where my stop loss were resting. I was like, when I see let me go to the 4-hour time frame. Yeah, this is it. I started buying gold here at this price. I bought gold here when it was 2,800 pounds. I started buying and it got here. I didn't take out any partials. I was like, let me let it just rally to this thing. Anything it wants to let it do. However, it got here, it's bled to the downside to where I was where my entry was, almost stopped me, because this is where my stop loss was resting. And I was like, nah, even if it is stop me out, I still know that gold is still coming to this price. However, look at what happened when it got here. Some people started selling here like this. I see some people started selling here and made some profit here. This was a pullback. I think there was a news that came out that day on Friday, something sales. It was a US related news. It was a very high impact news. I didn't actually notice it. My previous analysis, I said it, I didn't actually notice something like this. When it's bled to the downside, I said okay, since it's bleeding, I should just leave it. But when I see a 4-hour candle close below here, I will hedge my position, whereby what I mean is I will place a sell order and close out this buy position and take out something, because when it closes, if I should see a 4-hour candle close, automatically it will come to this downside. However, that didn't happen. What happened was it tested this price and it started trading back up here again. When it got here, what I did was I closed my level here. I closed something and I took out something above this level. what's happening. The service providers are always okay. Yeah, so when it got here, since I failed to take out 50% of my position, close it above when price was still here, when I saw it rallying up again, I didn't make that same mistake. When price got here, this was where I took out something. I closed out, I moved my stop loss to break even. I took partials around this level. Then this was the candle that took me out. This candle took me out and I was still in profit. When it took me out, I left it. I didn't enter the market. I was just monitoring gold to see what's going on. And this level, this shows that this is a very strong level. Remember, this is from here, and this, it got here again. I want to start buying gold. However, I want to see what price action reads on Monday. When I see a 4-hour candle close below this level, this is where I want to start buying gold. Above this level, sorry, this is where I want to start buying gold again to this upside, my overall target. However, I won't, if I see price coming back down here again, it's either I buy from here or I buy from here. However, I'm not going to be selling gold. I want to buy it. It's either I buy from above this level, or when I will just wait for price to come here, test this place, and I'll start buying from here again. So this is very much my review on gold. If you want to start buying, we'll just wait for Monday, Tuesday to see what price action, where it's going at the moment, which price is printing at the moment. Don't just trade blindly, and because if you trade blindly, you get stopped out. Again, let me go to, I'm very much bullish on GBPCAD. Yeah, I'm very much bullish on GBPCAD. Always from the weekly time frame. It's very much easy to understand. Resistance, supports. I saw this price got here, it's slashed down, it didn't get to this resistance, and however, I saw this weekly, this was a weekly bullish candle the whole week. When I saw this, I knew that, oh, price is still very much coming to this upside, and I'm still on this trend, till next week. Yeah, this is a daily time frame. I started buying here on last week Friday. Yeah, I started buying here. I bought here. Price got here. I took 50% of my position. It's still up. I'm still very much up on this trend. I'm still very much in profit. It has not closed yet. Let's go to the 4-hour time frame. So going to the 4-hour time frame, like I said, I started buying GBPCAD from here. When I saw 4-hour candle close above these levels, I bought from here. When it tested this place, this trend line, and started trading above it, I moved my stop loss. I moved my entry. My stop loss was here. I moved it up to this side. However, I'm still very much in profit. Remember, I entered here. My profit is still reading, and price is very much. My plan was, I plan on adding another position when I see a daily candle close above this level. I want to see a daily candle close above this level. Then I will add a good lot size on it. Here, when I see a daily candle close here, I want to see a daily candle close here, then my overall target is here. Because once you can only do one or two things, just double up, play down, and still move to the upside. But until then, I will see what price does at the moment. So Monday, normally I don't always enter trades on Monday, because Monday is a very much this is where I come to observe what the market is doing, what price action is doing. I check the fundamentals to see what analysts are saying, what the big banks are saying concerning a particular asset. And after Monday, Tuesday is where I get to start trading on Wednesday, because when I trade, I just go out of the charts. Yeah, the main thing is to know the buyers, know where the price, know where the money is going, know where the institutions are pushing the price to. So this is very much my review on GBPCAD. Again, should I touch GBPJPY? Still the same thing with other pairs. Yeah, I still got this one here. I still got it. Yeah, entered here. Once price touched here, I took 50% and I was stopped out. The same thing with EURUSD, USDJPY, EURJPY. All of them are positively correlated pairs. They move on the same price level. They are positively correlated. If USDJPY is selling, EURJPY is also selling. Likewise, GBPJPY. The three of them are correlated pairs. They are positively correlated pairs, just like GBPUSD, EURUSD, and AUDUSD. With New Zealand against dollar, they are just positively correlated pairs. They are going at the same level. Yeah, so this is it. Should I touch a little bit on did I trade? I didn't trade the EURUSD. I'm just monitoring it, and for now EURUSD is very much bullish. I want to start buying once I want to see what price action is going to do on Monday. This is where I want to start buying. I want to start buying either here or here. I want to see a touch of this trend line, then I will know where I want to start buying. My bias on USD quote currencies I'm very much bullish on them. GBPUSD, EURUSD, NewZUSD, AUDUSD. I'm very much bullish on these pairs because I know what price action is telling me is, although it's very much trading in between support and resistance. Likewise, NewZ, as you can see here and here. I just want to see the same settings. I want to start buying when I see price touch this trend line, or I see a 4-hour candle close, test and a retest above it, then I'll start buying to the upside. Same thing applies to GBP USD. As you can see, my analysis, I've already placed my map out my key levels, just waiting for confirmation to enter these pairs, and I want to hold them for a very long time. I want to actually hold them. I think AUDUSD is showing me some signs of entry. I want it to touch this resistance or this entry, then I'll start buying, and my stop loss will be very much below this resistance. This is a very minor resistance from the weekly time frame, and my overall target is here. I will hold it until whenever it gets here. It could take months. I don't give a fuck about it. So this is very much my analysis, my reviews on these pairs that I've been trading since 2 weeks now. If you have anything you want to ask, drop it on the comments, and I will very much be there to respond to it. And if you want to learn how to trade, you're welcome to. Just follow my analysis on this channel and give it time. You will understand. It takes some time to know what key levels are, to know where to place your entries and exits. It takes time. They will say, I think 1,000 hours of screen time is what you need to be able to identify where your targets are, your entries, your key levels. You map them out, and then once you know what price is doing at the moment, you are very much good to go, because you are not always sitting in front at the start. Initially, it requires you to sit in front of your system all day long, read price action, know where it's going, and with time, once you've passed that level, all you need to do is just to understand the overall flow of the market and buy or sell, identify your risk, move your stop loss accordingly, and just leave the chart. It's as simple as that. It takes time, but give it some time, you'll be better. Profitability is not something you just come, though we have beginner's luck. You just come today, maybe you're buying signals and you make profit, and you think it's like that. It's not always like that. Those things are not sustainable. It takes a lot of work and hard work and screen time and losses too before you get to that level of knowing, okay, this is where price is going. That's it. So do well to follow up, subscribe, and comment, share. Thank you, and let's go back to the screen, the intro. Thank you. Alright, we've come to the end of this presentation. I want to thank each and every one of us for sticking to the end of it, making sure you really understand why I chose to trade this way, and it gives me the leverage to hold trades for weeks and months. Gold, have been holding gold bullish since the past last week, and today is making it a week. Likewise, EURJPY and USDJPY, I place them, close my system, and do whatever I want to do. And again, if you check my analysis on USDJPY, it started tanking and it got to a point where I took out 50% of my position, break even, and it still got to my TP. So that's what stop loss analysis is all about. That's what multiple time frame analysis is all about. It gives you that leverage to know, okay, where is the price going? Where is the bank? Where is the bank forecasting this pair? Where is it going? Like gold is going to 3,000 per ounce price. We all know that, and it might take time. You see it go up, down, come down again, pick some orders and go up. That's where gold is at the moment. That's why if you're trading, it's best to use a very nice stop loss. I don't like when people use tight stop loss and be like, okay, now you've entered this trade and afterwards you are stopped out, because you use a tight stop loss, and after that, when you get stopped out, you see the price bounce back to where it ought to be. Most these things are just how the market moves. It moves like just like a wave. It doesn't follow a straight path. It goes up, comes down, pick orders, and the main thing is to know where price is going at the moment. Where are the banks pushing the money to? Where are the big players in the market pushing the money to? The hedge funds, the institutions, the bankers like the Citibank, JP Morgan, Goldman Sachs. They are the ones that have the liquidity. What are they seeing this price? Where are they? Where do they think these prices are going? And if you check commitment of traders, which I always use, it helps me to know, okay, it shows me the shorts and the long positions of these institutions, like the large hedgers and the large speculators. When I use this, and I had to gauge my bias to say, okay, if my technicals is on the bearish side, or a bullish side, when I check my commitment of traders, I say, okay, now that if it is in alignment with what my technicals is telling me, if they are saying different things, most times I just leave it. I leave the pair and go to other pairs. That's why swing trading is actually nice. If you use the top down analysis, the multiple time frame analysis, you can trade virtually anything and everything. You can trade crypto, you can trade Bitcoin, you can trade forex, you can trade indices, you can trade stocks. It's all about understanding where the market is going to. So thank you, and wish you luck on your trading, and make sure you keep following this channel, stick to it, and let's grow bigger. Thank you and peace out.